The Wavy Tunnel, Module 6, Elliott Wave and Wavy Tunnel Connection by Jody Samuels. Welcome to the Wavy Tunnel Trading Methodology, Module 6, entitled Elliott Wave and the Wavy Tunnel Connection. Thank you again for taking the time to learn about a system which is timeless, applies to all traded markets in every market cycle. We hope you are enjoying this Elliott Wave method of recognizing and identifying trades called the Wavy Tunnel. In Modules 1 through 4 of the Wavy Tunnel course, you learned in detail about the 5 Wavy Tunnel trade setups that you can take at various points in the Elliott Wave cycle. We also introduced a trade management approach called the 3 Profiteers, which will help you remain balanced between fear and greed as you trade. In Module 5, we fine-tuned entries by reviewing candlestick patterns, covered actual trade setups using proper money management, and presented a top-down approach review. The Wavy Tunnel is one of the best Fibonacci and Elliott Wave-based trading strategies that I have ever seen in my 30 years of trading. In Module 6, we will link Elliott Wave counts with the Wavy Tunnel and introduce Renko charts to reduce the noise from the candlesticks. In Module 6, the learning objects that we will cover include wave counts and Wavy Tunnel trades, awesome oscillator review with additional indicators, Renko charts with Wavy Tunnel, conclusion of Wavy Tunnel modules. Woody Allen had this to say about success: 70% of success in life is showing up. Congratulate yourselves again for being here and showing up. That is half the battle, or as Woody Allen says, 70% of the battle. I have really enjoyed teaching you these last 10 weeks and wish you all trading success in the markets you trade using the Wavy Tunnel. In this module, we will fine-tune wave counts with the awesome oscillator and the Wavy Tunnel by showing you what the position of the wave and the tunnel are saying about the wave count itself. We will study Wavy Tunnel trade examples with wave counts from the daily chart on down. This is also a wave counting exercise in itself. See if you would count the waves the way I have done it. We will also introduce Renko charts with the Wavy Tunnel setup as an interesting side note. In the meantime, continue picturing yourself riding the waves and cashing in on profits using the Wavy Tunnel for success. In our Wavy Tunnel trade review, let's clarify our Wavy Tunnel trades by looking at the trend sequence once again. Wavy Tunnel trades can be broken down into 2 types: trend following trades and end of trend at point 0 and point T. There are 3 setups for trend following trades, the breakout setups. There are 2 setups for the end of trend at point 0 and point T, the PW and the FG. Today, we will look at the market cycle with the wave counts and the Wavy Tunnel overlaid on the charts. Wave counts and Wavy Tunnel trades. Case study, Euro-USD daily wave count. When the wave crosses the tunnel on the left for the breakout 1 trade, it coincides with the trend line break. Notice this trend line here with the green arrow pointing to where the trade is taken. You may want to get into the habit of using a trend line in your trade setup for the breakout 1 trade. It works. Notice also that the breakout 1 trade precedes a 5-wave sequence, which in this example is labeled blue circled 1, 2, 3, and 4 so far. Notice how price stays below the wave and the tunnel most of the entire time, with the exception of blue circled 2 piercing the tunnel in a steep wave 2 correction, a zigzag in fact. Notes: waves 1 and 2 trade nicely below the wave, tunnel, and the filter. Price hugs the filter for the steep wave 1, and price hugs the wave for wave 3, which means that the wave 1 angle is a bit steeper than the wave 3 in this example. Usually wave 3 is the steepest wave. The breakout 1 trade in this chart produces 1,000 pips in the wave 1 trade before the market retraces in a wave 2. By looking at the weekly time frame on the next slide, we will be able to determine the potential profit area, the PPA, and work backwards for the three profiteers' profit targets. On the weekly chart, we take the Fibonacci retracement of this last swing move and estimate the PPA to be between 50 and 61% of that move. If we use 61.8%, we get a move of 1,000 pips. Working backwards from the closest number in the Fibonacci sequence, 987, we get the three profit targets of 987, 610, and 377 pips. On a sell price of 141.50 and subtracting the three profit pip targets, we get profit targets of 137.73, 135.40, and 131.63. The actual low of that first wave is 131.45. Magic. Now let's move back to the daily chart to discuss the next wavy tunnel setup. We just looked at the weekly chart to determine the PPA for the first breakout 1 trade for wave 1. It requires a certain mindset to be able to take a trade like this and write it out on the daily chart. For traders with full-time jobs, this is the type of trade to look for. For day traders, this might not be the type of trade to fit your trading personality. It might be worthwhile to take this type of trade in another account, however, with a small position just to develop the brain muscle to stay in such a trade. Day trading can also be done in a different account with different trade plans. Let's move on. As wave 1 ends, the awesome oscillator is extended down here. When the awesome oscillator begins to come back to the zero line, as displayed by the green histogram bars, wave 2 is in progress. Have a look at the end of the wave 3. Again, the awesome oscillator is extended, and this begins the move back to the zero line, which is followed by a wave 4 pullback. This is how the awesome oscillator works with trends. In a downtrend, the awesome oscillator stays below the zero line, and when it begins to pull back, that's your first clue that a correction may be in order. And we can see this for the wave 2 as well as the wave 4. Note, PW trades often occur when the awesome oscillator is at an extreme and extended from the zero line. Just as the PW takes us back to the filter first and then to the wave, the snapback price action takes the awesome oscillator histogram back to the zero line. When the awesome oscillator comes back to the zero line, it means that the minimum requirements for the wave 4 have been met. So now I'm pointing to the wave 4 on this daily chart. On the right side of the chart, we can therefore assume that the minimum requirements of this wave 4 have been met. However, the correction is labeled so far as a W, which is a combination correction, X, Y. The W consists of an ABC zigzag followed by a 3-wave X link connecting waves W and Y. The Y also consists of an ABC, but it is looking like a flat correction, and on this chart we haven't completed the C leg up, which could potentially move back to this wave before turning around and trading lower. Notes: confirmed PW trades have divergence between wave 3 and wave 5. In order to see divergence in the awesome oscillator, the chart needs to have between 100 and 140 candles in the 5-wave sequence. On this daily chart, we would need to go down to a smaller time frame, either the 4-hour or the 1-hour charts, in order to see the divergence in wave 1 or in wave 3. We are going to pass on that exercise for now and continue on with this review of the wavy tunnel trades on the daily time frame. We will revisit that in a few slides. Looking at the breakout 1 point for wave 1, a trade was taken once the trend line is broken. One could have taken the trade on the trend line break or on the retracement for the wave 2. We went through that analysis already where we discussed the 3 profiteers' profit targets. That first trade doesn't preclude us from taking additional trades, however, as price continues to move lower. These could be considered add-on trades if taken with that initial daily chart trade. They can also be considered day trades or swing trades. Notice the breakout 3 trades when price corrects back to the 12 EMA. Take note of the candlestick reversal patterns at the 12 EMA as well. Also, notice how the blue circled wave 2 is labeled as an irregular flat, as the B wave comes down below the end of the wave 1. It is probably legitimate to also label that as the end of a blue circled one itself, followed by a WXY. But in order to determine that, we would have to go down to the smaller time frames to see if any of the Elliott rules are broken. That's the key to labeling the charts. So these breakout 3 trades could easily be taken using the same 3 profiteers analysis to determine the profit targets, along with that initial breakout 1 trade. And again, if you are a day trader or a swing trader and prefer not to hold a trade for that long, then just look for the pullbacks to get into the trend. That's what it's about. And because this trend is very steep, pullbacks to the 12 EMA are in order to take a position in the downtrend. At the end of this initial swing move, the PW and the FG trades set up. We would definitely have to look at a smaller time frame to see divergence in that wave 1. We will do that on the next slide. But notice how the blue circled wave 2 is a zigzag correction which extends past the tunnel. Actually, it looks like a zigzag if we label the wave 1 down here, but as we label the wave 1 to the left, the initial W is it's a flat correction, but it is a bit too long to be a flat correction. Perhaps it really should be labeled as a zigzag. Right. So going back to this wave 2, the fill the gap trade between the wave and the tunnel is quite small. However, this wave 2 is a breakout 2 trade on this daily chart. Notice how the wave returns to hug the tunnel before the wave separates from the tunnel once again. That is a characteristic breakout 2 trade. And have a look at this evening star candlestick reversal pattern. This is a great reversal pattern for a breakout 2 sell for trend continuation. And in this case, trend continuation would be the continuation for the wave 3 move. So definitely a trade to get into. Moving right along with the wave 3, the blue circled wave 3, notice that the Elliott wave rules have not been broken. Wave 2 does not trade below the start of point 0, or trade above in this case, because it's a downtrend. Wave 3 is not the shortest wave, and wave 4 does not overlap wave 1. And every time price retraces back to the filter, or back to the wave, in this case, it can be sold. Sell on strength is your mantra in a downtrend. Sell on strength. Notice the engulfing pattern and the dojis positioned at reversal points. And initially the stop can be placed above the wave. If the three profiteers are used for trade management, follow the rules for the three profiteers. Point is, breakout 3 trades can be taken all the way down for the wave 3. And as we noted on the previous slide, because the wave 3 is less steep than the wave 1, price retraces back to the 12 EMA is very close to the wave, so price retraces back to both the 12 EMA and the wave along this wave 3. Moving right along to wave 4, you can see the PW trade at the end of the wave 3, which is followed by a fill the gap trade. The initial PW trade is a wave A of W to the wave. And then we have a B wave correction followed by our anticipated fill the gap trade between the wave and the tunnel. We didn't quite make it to the tunnel for this ABC correction, and at this point we're expecting the Euro USD to continue on down for a wave 5. But what happens? Instead of a 5-wave move down for the initial wave 1 to start the move, we have a 3-wave corrective down, which tells us, it sets off a little alert to say, okay, the correction isn't over yet. Perhaps this is, we're going to have a combination correction, which is indeed what we have. So we label this X, which is the X link, because it's a pattern which connects two other patterns. And for the Y wave, we are expecting a move up for the C, which would complete a flat correction. We have a 3-wave A followed by a B, and we are expecting a move back up to the tunnel, which should complete this WXY pattern. It is always important to think of the possibilities for next moves. Moving right along, we would expect a resumption of the downtrend for blue circled wave 5 once this wave 4 is complete. Look to sell at the completion of the wave C of this Y. Look for price to halt at the tunnel. Certainly move to a smaller time frame to count the 5 waves in the C leg as well. Once wave 5 begins, look for breakout 3 trades to enter off the filter and or the wave, just like we've described for the wave 3 and the wave 1. On the next slide, we will go back to blue circled 1 and zoom in on a 4-hour chart to see the divergence between waves 3 and 5. Now we see blue circled wave 1 in its entirety on this 4-hour chart. First, notice the wave 3 extreme in the awesome oscillator. Wave 3 is followed by a wave 4. In terms of the awesome oscillator, the minimum requirements of the wave 4 have been met, with the histogram moving above the 0 line. Blue circled wave 1 breaks down into 5 clean waves. Wave 1, wave 2, wave 3, wave 4, wave 5. None of the Elliott waves rules have been broken. There are between 100 and 150 candles in the 5-wave sequence, so the awesome oscillator properly notes the wave 3 and the wave 5 peaks with divergence. Notice also how the awesome oscillator stays below the 0 line until wave 4, which signals downtrend. And have a look at the reversal candlestick patterns as well. At wave 2, look at this shooting star with such a long tail. What a great reversal point. And the stop loss is placed right above the tail, which coincidentally is above the wave. So perfect spot for a stop loss. The wave 4 pullback also ends with a long-tailed candle, followed by a few small bodies prior to the move down. On the next slide, we will look at the wavy tunnel trades in more detail. The breakout 1 begins the downtrend. Notice the trendline break as well as the 1, 2, 3 reversal pattern at point 0. In the 1, 2, 3, this is the top is point 1, the first leg down is point 2, the correction or retracement is or pullback is point 3, and when price trades below point 2, a sell is established. 2 confirmations for the breakout 1 sell trade. Next, the wave 2 pullback to the wave creates a breakout 3 opportunity with a lovely shooting star reversal candlestick pattern. Next, the wave 3 bottom with a reverse peak in the awesome oscillator provides a PW buy, noting a hammer reversal candlestick pattern at this low. A side note is that in order to see the divergence in the wave 3 itself, this wave 3 itself, one will need to go to a smaller time frame to put between 100 and 140 candles on the chart. I should also note that a PW buy isn't necessary when looking at this time frame. One can also wait for the wave 4 correction and take a breakout 3 sell. However, since it is a daily chart and the wave 4 sell materializes, I guess about a week later, this is the 4 hours, so less than a week later, you might want to go down to the smaller time frame and take a look at this wave 3 for the PW buy. Moving on to the wave 4, the FG trade falls short because of the degree of bearish sentiment on the Euro-USD at this juncture. The minimum requirements for the wave 4 have been met, with the awesome oscillator coming back to the 0 line. A breakout 3 trade may be taken with a stop above the long-tailed shooting star at the top of wave 4. The next breakout 3 trade noted is the subwave 2 of subwave 5 of blue circled 1. So that would be right up here. Finally, there is a beautiful PW trade at the conclusion of blue circled wave 1 with triple divergence in the awesome oscillator. The same wavy tunnel trade management process can be illustrated on the blue circled wave 3. That would be a good exercise for you to do yourself. Look for the breakout 1, breakout 2, breakout 3, PW, and FG trades on the blue circled wave 3. On the next slide, we are going to skip to blue circled wave 4 on the daily chart and zoom in on that corrective pattern. Let's look at the daily wave 4 correction below. We first notice that we have PW and FG potential trades. This is the PW and this is the FG. If we look at the wave W leg, we see an ABC zigzag correction taking place. On the 4-hour chart, what would that look like? We would expect to see the A leg on the 4-hour as a PW-FG trade on its own. Remember, a PW trade on the daily is the same as an FG trade on the 4-hour chart. Let's go to the 4-hour chart now to zoom in on this move. Sure enough, on the 4-hour chart, the A leg of the W is a combination PW-FG trade. The first leg of the A wave takes us to the wave, followed by a small correction, and the third leg takes us to the tunnel. Thus, the A is a PW-FG combo trade. Once that is complete, the B leg of this W takes us to the wave in a 3-wave correction. You can see this 3-wave correction, which is followed by a 5-wave C in a breakout 1 trade as the wave crosses above the tunnel. Moving right along, there are two breakout 3 trades along the wave in the C leg of W. Notice we are taking the breakout 1 and breakout 3 trades for this corrective sequence in the opposite direction of the original downtrend. Are you now beginning to see that it is not totally necessary to be a consummate wave counter in order to trade this wavy tunnel strategy? On the next slide, we will continue along with this corrective sequence and make sense out of more of the wavy tunnel trades. The wave W, straightforward ABC zigzag pattern which rides the wave nicely, is highlighted in yellow. We described the wavy tunnel trades on the previous slide. Let's move on to the pink highlighting. The X wave is a straightforward ABC zigzag as well. Everything about it looks corrective. It is a 3-wave move, which means that this correction is not over yet, and one cannot expect the Euro-USD to drop from here without another corrective leg. The Y wave is turning out to be a flat corrective pattern with the A, the B, and the C. With the A, the B, and the C. This is illustrated by the wave flattening out to a sideways and parallel position to the tunnel. This creates the breakout 2 trade in this position right here. This breakout 2 trade takes us to the completion of the 5-wave C leg for A. This is then followed by a 3-wave B, and once complete, we would expect another move up for the wave C to complete this flat wave Y. Here we highlight this 3-wave wave B, and on the next slide we will drill down on this B wave on the 1-hour chart, followed by a 15-minute chart for day trading. Drilling down on the 1-hour chart, there is a breakout 1 trade that sets up for the circled C wave down. On the 4-hour chart, the circled ABC is a combination PWFG trade. The FG gives the initial target for the circled C wave. Let's just go back to this 4-hour chart so that we can see what we mean here. Once we take the breakout 1 trade on the hourly, we can target that move by looking at the tunnel and using the 3 profiteers profit-taking methodology, figure out what profit targets we're going to use for this wave C. Now let's go back to the 1-hour chart, and that's what we would do were we to take the 3 profiteers and use the profit targets from the 4-hour tunnel target. Looking at this chart alone, there are also breakout 3 trades setting up when price retraces back to the wave. If we look at the wave count on this 1-hour chart, we see that we have completed a wave 1, an ABC wave 2, a wave 3, we are anticipating a wave 4, and another wave 5 to complete this wave C. And once we have the wave 3 completed and the 5 completed, we should see divergence in this between the wave 3 and the wave 5. On this 15-minute chart, we have an earlier breakout 1 trade occurring at the start of wave 1 of C. Wave 4 provides a breakout 3 trade opportunity. Moving along for the wave 2 brings the wave back to the tunnel for a breakout 2 trade. During wave 3, which we will also pick up on the next slide, we have breakout 3 trades, which are corrective pullbacks of impulsive subwave 1 of 3. We left off on the last slide noting the breakout 3 trades, which are corrective pullbacks of subwave 1 of 3. This slide looks at the entire wave 3. Moving along, at the end of subwave 1 of 3, we have a PW trade setup for the A wave, followed by a B, which is the starting point for the fill the gap trade for the C wave of 2, of green 2. The PWFG combination is very often a great 1, 2, 3 trade for zigzags. Following along with subwave 3 of 3, which would be this piece in here, we have another breakout 1 trade to kick off this 5-wave sequence. This breakout 1 trade is confirmed with a trendline break and a 1, 2, 3 entry as well. There are also 2 breakout 3 trades during the pullbacks to the 12 EMA and the wave. Finally, notice the divergence between waves 3 and 5. Because subwave 5 of green 3 is an ending diagonal, if you can see my cursor in here, we have triple divergence for the wave 3 itself. You can still clearly see the overall divergence between waves 3 and 5, however. On the next slide, we are going to focus on the move to the right of the green subwave 2 of 3. We could say a parentheses 3, which is down here. So we're going to focus on this piece over here. For the green subwaves 3, 4, and 5 of parentheses 3. Just a note, once you start counting waves, you get into a very exact nomenclature with colors, parentheses, and circles. Please review the nomenclature section of the course, which is located in modules 1 and 4 of the Elliott Wave modules. This chart illustrates green waves 3, 4, and 5. We have potential sells all the way down from green wave 2, all breakout 3 trades. Notice how price never goes above the wave during this extended green wave 5. And when wave 5 completes, we have a PWFG trade to the 15-minute tunnel. On the next slide, we are going to add a few indicators to the chart to show how you can add confirmations to these breakout 3 sell trades. I added the 3-period RSI as well as the 533 stochastics. Both indicators are oscillators to be used to find overbought situations in a downtrend. Use these oscillators to sell on strength in a downtrend. Continue to use the awesome oscillator to find divergence. When you sell on a pullback for a breakout 3 trade, check to see if the RSI or stochastic is above 50 before selling. Look at the vertical lines on the chart which line up the breakout 3 trade with the oscillator. See how they line up? Perhaps this will give you confidence to pull the trigger. Trading the wavy tunnel setups is all about internalizing the setups and developing confidence to pull the trigger. Think of the oscillators as a timing device for sells in a downtrend along the wave. Of course, the opposite is true for a buy. Think buy on weakness when you're buying the breakout 3 in an uptrend. This concludes the section Wave Counts and Wavy Tunnel Trades. The next section is entitled Renko Charts with Wavy Tunnel. Renko charts with wavy tunnel. Renko comes from the word renga, which means brick in Japanese. Renko charts have a brick size that varies according to the time frame traded. Bricks are added when prices fill the brick. For example, on a 10-pip brick for the Euro-USD, if price moves from 132.10 to 132.20, a brick is added. A brick is not added until it moves up a full 10 pips past the previous Renko bar. In the chart to the left, bearish bricks are red and bullish bricks are blue. Because they screen out moves that are smaller than the brick size, the trader is not influenced by price action. Noise is filtered out. Renko bricks remove the distractions which cause whipsaw and include long wicks and false breakouts. Trends are easy to spot and trade. Renko bricks combined with the wavy tunnel make the 5 wavy tunnel trade setups very easy to see and trade. Renko charts with wavy tunnel. Case study. Euro USD Renko 6 pip brick 15-minute equivalent. This is the same 15-minute chart for the Euro USD taking in green subwaves 3, 4, and 5 of orange parentheses 3. It was determined that 6 pip bricks presented the price action well for the 15-minute time frame. Notice how these Renko charts help reduce the noise from price swings. They are time-independent charts. For example, if the market trades sideways within a 6 pip range for several minutes, the brick won't update. It will only update when there is a move outside of that 6 pip range. The wavy tunnel works very well with Renko charts. It is very visual and might help a trader stay in the trade longer. We will illustrate the wavy tunnel setups on the next chart. Renko charts help reduce the noise from price swings. Unnecessary price spikes are contained with Renko, so the fear versus greed syndrome is tempered. Let's look at the wavy tunnel trades now. Notice how the vertical lines on the charts at the breakout 3 and PW points. Now look at how the trades line up with the stochastic and the awesome oscillator underneath the chart. Taking the first breakout 3 trade, price is contained by the wave, and the stochastic is at a very nice overbought position. Remember, sell on strength. At the PW trade for the green wave 3, there is divergence in the awesome oscillator, and the stochastic is oversold for a buy. The next breakout 3 trade is ripe for a sell with the overbought stochastic. Finally, the PW trade is ripe for a buy with awesome oscillator divergence and oversold stochastic. The next chart will compare this Renko chart with the candlestick chart. On this chart, we modified the brick setting to 13 pips because the time frame is 1 hour instead of 15 minutes. This is the same Euro USD hourly chart from several slides ago. Notice how we label the Renko chart similarly to the candlestick chart. The wave patterns present nicely on Renko. Now, notice the clean 3-wave move for the red circled B wave. Picture yourself staying in a short position from that point until the end of the downtrend with the Renko bricks. That would be at this point here for the next downtrend from the B wave to the next downtrend to the right. Finally, that would be right here. Look at the PWFG trade on the far right. Notice how Renko kept the trade in place until price reached the tunnel. Renko is food for thought. It is just another tool to use if it suits your personality. If you are not impressed, drop it. This is not a recommendation to start using Renko charts. It is just interesting to point out. Wave counts, Renko, and wavy tunnel trades. Notes on the Euro USD case study. We just completed a top-down approach starting with the daily Euro USD, incorporating many of the concepts learned in this comprehensive Elliott Wave Wavy Tunnel course. If you understand this module, you are well on your way to applying the wavy tunnel in your trading. I hope we impressed upon you that labeling charts is not mandatory in order to start producing income from wavy tunnel setups. By doing a top-down approach, we never lose sight of the big picture. It is very easy to get too focused on smaller time frame charts we are trading. Focus on the time frame traded while gaining perspective of the big picture one time frame higher. In this module, we introduce Renko charts with the wavy tunnel setup. You can see how the Renko charts get rid of the whipsaw. We also compared Renko charts with candlestick charts to see which are more effective. They each have their strengths. With Renko charts, while price spikes are removed, sometimes it is those very spikes which produce the impetus to sell or buy on that reversal candlestick pattern. On the next slide, we will go through wavy tunnel setups on the weekly S&P as a final chapter to this course. Weekly wavy tunnel, case study, S&P Weekly, February 2005 to November 2008. This is the first of two weekly S&P charts. Starting from the left, we have breakout 3 trades all the way up the wave, finding support at the wave itself. Take the trades using the reversal candlestick patterns which present themselves at every reversal turning point. Feel free to add that oscillator, which will add confidence to pulling the trigger and buying on weakness. At the top of the market, we have divergence in the awesome oscillator. After the market peak, we have a price to wave fill the gap combo trade. Once the wave crosses the tunnel, the breakout 1 trade emerges and sets up. The breakout 1 trade is followed by breakout 3 trades at the 12 EMA. The wavy tunnel really tells a story, and this story can be told on every single chart, in every single market, on any time frame. Weekly wavy tunnel, case study, S&P Weekly, August 08 to April 2012. This is the second of two weekly S&P charts. Starting from the left, we have a beautiful PW-FG combo trade. Notice the divergence in the awesome oscillator and the bullish engulfing pattern at the market bottom. Price reaches the tunnel, at which point it trades sideways for several months. This circled area is the area in which to avoid trading in, as it is the corrective zone. The wave lines up with the tunnel and finally crosses it, giving way to a breakout 1 trade once price moves above the wave and the 12 EMA. At the next peak in the market, we have divergence again, and the market is ripe for a PWFG trade back down to the tunnel. Finally, the breakout 2 trade materializes once price trades above the 12 EMA and the wave itself. Write down your wavy tunnel story. You will be able to follow these patterns in your mind, and when you do, spot these setups as you are trading. It is a great story that can give way to consistent profits for a long time. Wave counts, Renko charts, and wavy tunnel trades. Conclusions. When the wave and the tunnel come together on the daily chart, then a big move is about to happen. The same applies to the weekly chart. Look for a breakout 1 trade. When the wave and the tunnel are separating, then the current wave is likely to be an impulse wave. Waves 1, 3, 5, A or C. Look for breakout trades. When the wave and the tunnel are coming together, then the current wave is likely to be a corrective wave. Waves 2, 4, or B. At the end of the sequence, if there is divergence in the awesome oscillator, it could be an end of the trend trade. PW, FG. End of wave 5 or C. Finally, the closer the EMA 12 filter to the tunnel, the more likely the break will be sustainable. Wave counts, Renko charts, and wavy tunnel trades. Conclusions. There are many ways to run with the wavy tunnel. From a swing perspective, use the 1 hour to take the trades and the 4 hour in the daily to confirm the setup. From a day trading perspective, use the 5-minute for entry or the 1 minute and look at the big picture on the 15-minute and the 1 hour. From a long-term perspective, trade off the weekly or the daily on its own. Variation. Take trades using Renko charts to reduce the noise factor and maintain balance on the fear-greed continuum. Trade planning is key. Maintain organization in your trading life. Be consistent with documenting the trades and reviewing them weekly and monthly. Set goals for yourself. Create a trade plan for the trade setups that you are looking for in the market. Money management is key. Always calculate your position size. Thank you so much for being part of the Elliott Wave and Wavy Tunnel course. We hope you enjoyed this experience. Keep focused and keep it simple. To your trading success, always.